Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from CareCloud. Seems like they're really trying to highlight those dividends they're paying out, but is it all sunshine and roses, or are there some clouds hiding in the background? Let's find out. Before we jump in, if you enjoy getting these insights from corporate reports, make sure to subscribe. We also have a Discord community where you can discuss this and other companies, and that's linked in the description below. This is a Form 8K filing. That means CareCloud is letting investors know about something important that just happened. In this case, it involves dividends, which are payments to shareholders from the company's profits. The filing is dated April 30, 2025, so this is a pretty recent snapshot. The company we're talking about is CareCloud Inc. They're incorporated in Delaware and their IRS number is 2238323002. CareCloud has common stock listed on the Nasdaq Global Market under the ticker symbol CCLD. They also have preferred stock trading under CCLDO. Okay, here's the core of the report. The company put out a press release announcing they're declaring monthly cash dividends payments for both their 8.75% Series A and Series B preferred stock for May and June of 2025. Preferred stock gets paid dividends before common stock, so these are important for those investors. The dividend rate is 8.75%, which is relatively high. Scroll dividends for its 8.75 crested Series A, cumulative redeemable perpetual. Preferred stock scroll, they are paying out dividends on two types of preferred stock. Dividends are basically a thank you, a reward for owning the company's stock. Think of it like interest payments on a bond but for stock. Here we have a standard safe harbor statement. It is basically saying that any predictions the company makes about the future are just that, predictions, and things could change. It is important to remember that the company isn't promising anything. Here's the list of exhibits attached to the filing. Exhibit 99.1 is the press release they mentioned. So if we wanted more detail, we could dig into that. The report was signed by Norman Roth, who's the interim chief financial officer and corporate controller. He's the person responsible for the accuracy of the financial information. So what's the big picture here? CareCloud is highlighting dividend payments on its preferred stock. This can be a good sign as it suggests the company has enough cash flow to reward its investors. Preferred stock is like a hybrid between stocks and bonds. They typically don't have voting rights, but they do have priority when it comes to getting paid dividends. To move to our analysis, CareCloud is making a point to announce these dividends, which suggests they want to be seen as a reliable investment. Companies use dividends to attract and retain investors. It makes the stock more appealing, especially in a market where people are looking for stable income. But we must ask ourselves, where is this money coming from? Is it a sign of actual profitability, or are they taking on debt to make these payments? We can't tell from this report alone. It's important to dig deeper into their overall financial health. Looking at it, a high dividend yield like 8.75% can also be a red flag. It could mean the company is struggling to grow and needs to offer a high yield to attract investors. It could also mean the market doesn't have much faith in the stock's future. So what's the final word? CareCloud is sending a signal of stability with these dividend payments, but investors should proceed with caution. It's essential to look at the company's overall financial performance. Are revenues growing? Is the company profitable? Are they carrying too much debt? Do you think CareCloud is a worthwhile investment? Drop your thoughts in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description for more discussion. Thanks for watching, and I'll see you in the next video.